Good evening, Maryland home buyers. Thank you so much for being here. My name is Kelly Beard, Content Specialist for Maryland Realtors, and I want to welcome you to your Home Buying Keys webinar. Assembled tonight, we have experts in the industry. With us is our very own Director of, sorry about that, I'm just muting some people. Our very own Director of Advocacy and Public Policy, Lisa May. We also have Frank Bimonde and Catherine Kramer Dale from Maryland Housing and Community Development, James Hall from Freddie Mac, Lisa Gatton-Rapina from Homeside Financial, and Cherise Scott from Desiree Calendar and Associates. Tonight, you will get an abundance of information to help you navigate and succeed in your home buying journey. This webinar will be recorded and sent out to all attendees after the conclusion of the webinar. We do encourage your questions and we look forward to answering them. Please post all questions in the Q&A box below at the bottom of your Zoom screen. And with that, I will turn it over to our Director of Advocacy and Public Policy, Lisa May. Lisa, take it away.
Kelly, thank you so much. And thank you everyone for joining us here tonight on an August evening to learn about buying a home here in Maryland. We were just all talking about how summer's almost over, or at least it kind of feels like it. But with the end of summer comes our fall home buying season. And when you think about buying a home, there is just so much to learn. Is it a good time? Is it a bad time? Are you going to regret it? Are there programs out there to help me? And, the answer to that, of course, is yes, there's lots of help out there for you. And you've already taken the first step by joining us here tonight. So really and truly, thank you for being here. We want to share some information on home buying in Maryland straight from the experts, the people who do this day in and day out and get people just like you into the home that they need. So we will kick it off first with a Realtor member of our Maryland Realtors Association, Cherise Scott. Cherise is with Desiree Calendar and Associates in Bowie. I've also, fun fact, learned that she has a background in broadcasting. So I feel the need to up my game tonight to match her presentation. But really thrilled to have you here, Cherise. Why don't you take some of our participants here sort of through, what first-time home buyers can expect out there?
Thank you, Lisa, and good evening, everybody. You put me on a spot with that, with your fun fact checking. Okay, but I'm really happy to be here tonight. And another fun fact, one of my favorite clients to work with are first-time home buyers, because I love to educate, empower, and inform. And Lisa said it, sometimes home buying, people think of it seasonally. Tonight, I'm excited to kind of just put you in a mind frame of how you can prepare no matter the season, no matter the reason, because when you decide you need to move, it might not be in a season. It's just a time and a place and a reason in your life, in your own season, not summer, spring, and fall season. So yes, I have a presentation. I'm going to bring it up and just share some things along the way. So Desiree Calendar and Associates, guess what? Desiree is my mom. She's been a real estate agent, realtor for 40 years. I've been doing this for 10 years now with her after a long tenure in the media business. And like I said, never thought I would want to be a realtor, but love helping people, love educating and inspiring and empowering people. And so that's where I am today. And I love doing what I do. So I've got some slides here that I generally share with my new home buyers in this kit that you're seeing me walk through. I do it in a checklist format because that's usually, can you see what I'm sharing? Just so I can make sure everyone can see it.
Not quite yet, no.
No, okay. Share screen. What happened to my share screen? I was so ready. Okay. Now you can see it, right?
Yes, we can see your file folder.
That's interesting. All right, well, let me just talk it through while I try to go through my own little technical difficulties here. So first steps that I generally share when it comes to buying a home, I have what you call a preparing to buy checklist. Always start with your realtor. A lot of people feel like, hey, I can just shop online for a home. And you can see the homes there, but sometimes you can't see the background information, the research that it takes to really be informed about the property that you may be interested in. It's more than just the price point. It's more than just the home style. It's more than just the location. Especially in this market, you want to really be informed about things like the condition, how many days on the market the house has been, what type of sale it is, if it's a bank-owned property, if it's an estate sale, if it's a probate, if it's a standard. Kind of knowing all those little inside parts of a transaction can also help you in determining the type of negotiation that you have with the offer that you're going to make on the property that you fall in love with once you actually get out there and see it. So having a realtor partner to work with you through the process is going to help you get that professional guidance and understanding of the home choice that you select. So the first step in our process is to discuss your, home buying scenario. Some of those things I just mentioned, the location, what your price point is, what type of monthly payment you're looking for. And we always send you to a lender, which I know you're going to hear from one tonight, to find out what you qualify for. Before you jump out and start looking for the home of choice, you want to know, what can I afford to buy? And what type of financing is going to be the best fit for me. Right now, people say, hey, FHA financing, which again, I'm not going to take too much of what your lender is going to share tonight, is the most economical option for folks because you have a low threshold for a down payment. But one key thing to know now is that conventional financing also have some low thresholds for down payments. And here's a tip. And it's unfortunate. And we have our housing folks on here and our folks from Freddie Mac. There is sometimes discrimination from the seller's perspective because they look at FHA financing as being a little more stringent on what they may have to do on the other end if they were to accept your offer. So sometimes the seller is looking for a conventional offer because they know they may not have to be as responsible for fixing certain things that the appraiser comes in and flags based on the offer they made on your house. So again, that's some insight that a realtor would be able to share with you in helping you to structure the best deal for the offer you want to make on a property. So having your realtor partner, having your lender partner, understanding what the best finance type for you to move forward and what you qualify for are some key steps in preparing to buy a home. Once you know what you're approved for and what you qualify for, we start matching up the criteria. I am a busy lady. I have 4 kids. They're in all age ranges. So COVID really helped me and our team to streamline processes and to really help our clients to do the same. So where some people have in their mind, oh, I'm going shopping for a house, which means I'm going to go out every single day and look at 5 houses a day until the wheels fall off. That's not really the most efficient use or effective use of your time. So there are a lot of tools that are available. Some of them you guys probably already use, like on Zillow, Redfin, Realtor.com, whatever, fits your boat. Most realtors also have apps and websites and things that are comparable that you can use. Just know this, and here's a tip. Your realtor partner is registered with an MLS system. So generally speaking, any home that's listed and its true active status, right? That there's no offers on it, it's fully available, they're going to have access to through their systems. And those systems feed the Trulias of the world, the Zillows of the world, whatever you use of the world to shop for homes. So just know that they are a first point of contact in having access to real data to help you find the home of choice. Using those systems to shop and streamline your search criteria is going to do gangbusters for your tolerance through the process. Because once you really get out there shopping, you know that you've done your due diligence to streamline your search process and make the best use of your time when you go out there to look for a home. In this market, man, homes are flying off the shelf within, 2 to 5 days. Typically, what we see, if a home is on the market for longer than a week or 2 weeks in this market, that means the house is either priced too high, it's not showing well, or there is some other condition or factor in there. Could be sometimes it's occupied and that tenant's not being, not being accommodating to a showing schedule. So just know those are some nuggets that you can see. Now, having said that, if the house is not going to be on the market that long, that's even more reason for you to make sure that you're super duper prepared before you hit the streets going to look for a house. Because once you find the home of choice, you will not have a super long time to figure it out. You're going to have to be able to make a decision on the home that you have found that you want to purchase. So those are the three, I would say, main things that would help you to prepare yourself for buying a home. The next thing is, if I have a few more minutes here, and I don't know what you guys are seeing because I'm technically deficient. I will tell you that. I can talk, I can guide, I can educate, but when it comes to these Zooms and all this stuff, so I don't know if you're seeing me or seeing my file folders. Somebody tell me
We're
what
seeing you.
You're seeing me? Okay.
Yes.
All right. So let me go back here for you for a minute. All right. So the next steps that we usually look at is writing an offer. And I'm excited to share this one with you because, again, these are going to be tips that, they're going to help you with being successful in your making an offer and getting your offer accepted. That's the thing. You don't want to just make an offer. You want to make an offer that's going to be accepted. Okay. So I have a writing your offer checklist, and I don't know, maybe I can share this later or however this works. But so the first thing on the checklist is your purchase price. You see the price that the lister, that the seller wants for their home. Most people are thinking in their mind, I don't want to offer that much, because you're thinking about what you have to do to the property. But the thing you want to also consider is putting yourself in that seller's headspace, right? Your realtor should be able to help you to understand, one, if the house is priced right to begin with, two, if it's priced below or at the lower range, right? Because we have a range. We have a price range on the low end of what the market value should be and on the high end of what the market value should be. A lot of strategies that we're seeing right now are people pricing their home on the low end of the market range, which is going to generate multiple offers and sometimes offers up to $30,000 above the list price. And while that sounds ridiculous, what you have to understand is that they've priced it low to begin with. So the realtor that you're working with should be able to inform you in that way to help you understand that if the house is priced on the lower end of the range, then making this offer of $20,000, $30,000 is still within the market value for what that home could potentially appraise for, or what the value should be based on its location, condition, and all of those things. So you want to be able to have those kind of conversations, or know that you're working with a realtor that understands the market in that respect. The other tip I'm going to leave you with, and then somebody can check me on time with my 15 minutes, are the contingencies. Okay. Contingencies are what can make or break your offer beyond just what you offer in terms of the purchase price. So when we talk contingencies, we're thinking things like your home inspection, whether or not you're asking for a seller credit towards your closing costs. Okay, where when I started 10 years ago, You could offer on a house and ask for 3% seller help, and they wouldn't even blink. They'd be like, yes, it was just like expected that you would get 3% seller help. Now you ask for 3% seller help and they may not even look at your offer, right? Just depending upon the home that you're going after. We talked about earlier the type of financing and how that can impact. Some sellers are looking at whether it's FHA, VA, conventional. Some are looking at how much of a down payment that you're making. They want to see how much of an earnest money deposit you're putting down. And then they also want to know how quickly are you going to close and how likely are you to close. I've seen some listings say things like, we want to make sure you have a reputable lender letter. I don't really know what that means. I don't know who qualifies what a reputable lender, might be. But the fact of the matter is that these are things that when you're submitting your offer, the seller is looking at. So tips I can give you to consider, discussing with your realtor, or that you should expect your realtor to discuss with you. If the house is what we call a hot home, it's in a location that a lot of people are vying for, it's priced at the lower end of that market range that we talked about. So you can expect it's going to have multiple offers. And it's in great condition. One thing that we've seen transition over time from this buyer market, seller market, whose market is that some sellers aren't taking great care or pride in how they're presenting the home to a buyer. And the buyers are kind of losing a tolerance for that. They don't want to necessarily spend their money just on anything. So the minute you have a seller who has taken pride in time and energy and making sure that they've checked all the boxes and made the house look like how they would want it to look if they were buying it, everybody's going for that house. So depending on the type of contingencies you have built into your offer could be the ticket to your success, or not so much in terms of having your offer accepted. So home inspections, you always want to make sure that you are comfortable with being informed about what it is that you're buying. While a home inspection, you can make your offer contingent on whether or not you are going to move forward with the sale or you're going to back out, or sometimes there's an opportunity for you to negotiate the offer. Make sure you discuss that strategy in great detail with your realtor, because it can go any way depending on the home of choice. The closing help, don't be afraid to ask for it. Some people are still giving closing help, but again, you have to look at certain key factors. What's the condition of the property? Is this a property that a lot of people are competing for? How many days on the market has it been on there? Are they selling it at the higher end of the range because they're anticipating that maybe the buyer in this market might need some seller help? These are all strategies. These are all nuggets that I'm giving you that a seasoned realtor who knows what they're doing and knows how to really guide you are going to take these things into consideration when they're helping you to write a winning offer. We talked about the financing, having a lender partner that's accessible, so that when you submit the offer, we usually copy our lender partner on there so they know the offer has gone in. It gives the realtor quick and easy access to call the lender, reach out to them really quickly to say, hey, I got this offer for so-and-so. How, good to go are they? And can you really close this loan in 10 days? Because believe it or not, there are lenders out there that are closing loans like 15 days. It's ridiculous. The title company can't even really keep up with them. But I guess, technology and systems have made it so that they're able to turn these loans around, especially if you're an organized buyer. If you have done your due diligence to make sure you've got your taxes in order, you've got your bank statements in order, you have all those things, and I'm sure Lisa will get into more of how to prepare yourself to, talk to your lender. But if you're an organized buyer, you can get from, ratification of an offer to closing relatively quickly these days. And then the last couple of things, your settlement date. Like I said, you work with your lender and your title company to determine how quickly your team, your realtor, your lender, your title company are going to get you to the closing table. That goes into the offer. And then this other nugget, sometimes if I have a buyer who says, hey, this house is spick and span, the disclosures look amazing, I'm comfortable with waiving my home inspection contingency, there are things like a home warranty that you can put in place. Some are better than others. Some people have horror stories about their home warranty programs. I have some great stories about, some home warranty programs that have been lifesavers for people. That's a way to kind of put some extra insurance in place if something you didn't anticipate happen. So there's some protections there. So I hope that was helpful. I know there'll be some opportunity for question and answer later. I'm sorry my screen thing never shared or worked out for everybody, but I hope what I shared was helpful for you so far.
Charisse, thank you so much. And to head off the questions, yes, absolutely. Our presenters, slideshows and handouts will be available to all of you. We'll email those out to you. Zoom will not defeat us tonight, okay? Charisse, just really quickly, you talked about how important having a realtor is. And, there are almost, 30,000 of you in Maryland, there are that many realtors. How would a first-time buyer know where to start to find the realtor who is the best fit for them?
That's a good question. I would say ask your friends. A large portion of our business is referral business from people that we've done business with in the past. And then talking to their friends and family who are just like, yeah, I want to buy, or, you just hear people in conversation. They're happy to share their realtor experience if it's been a positive one. There are also resources through Maryland Mortgage Program. People are registered on there where you can just kind of look up realtor in Bowie. If you look up realtor in Bowie, I don't know if you'll find me or not. I mean, there's so many. But I always just say referrals are a good way to start by asking, someone that may have bought a home recently, what their experience was like and who they worked with. And even talking to them, you can learn some things. What I'll tell you about listening to other people, though, is that their story won't be your story. Their circumstance is never going to be exactly your circumstance. So you don't want to, get into trying to compare the situations because they're never the same. I mean, as many transactions as we do, there's always something new. And even we learn things, as we go that we wouldn't have experienced. So I would say ask your friends, for referrals. And use the resources, at Maryland Mortgage Program. Maryland Realtors has, resources of realtors who are in specific areas that you're looking for.
Excellent. Thank you so much. And if any of our participants have questions as we go along, please feel free to put those in the Q&A. But for now, I'm going to move over to Lisa with the information in this event tonight. Lisa Gachon-Rapina from Homeside Financial. She is a senior loan officer and a top performing Maryland Mortgage Program lender based in Columbia, Maryland. Lisa, thank you so much for being here tonight, and take it away.
Okay, well, thank you for inviting me. I come to you with different Zoom challenges. With that, I can show you my flyers, but you can't see me. I know, really disappointing. But if you look at the flyer that I have there in the lower, left corner, that's me. So I'm there with you, nonetheless. Thank you again for inviting me to talk about Maryland Mortgage Program, Homeside lending. Maryland Mortgage Program is just a fantastic way to purchase a home. I've been in the mortgage industry, oh my gosh, since, I hate to put a number on it, and it doesn't sound so, I guess it does sound a lot when I say 1998, because who's been doing anything for that long period of time? But yeah, since 98, and haven't always used Maryland Mortgage Program, but over time you learn pros and cons. And also it's always good to have another tool in your tool belt in terms of presenting to borrowers what all of their options may be. I work a lot with first-time home buyers, love working with first-time home buyers because there's nothing like it. And I'm very big on preparation and readiness. Even though you can't see me, but still very big on preparation and readiness. It's very important in this fast-paced business that we have our pre-approval. We know exactly what we can do. There are some twists and turns that may come along the way, but very important to know what you can do, what your buying power is, because as Sharice mentioned, properties are on the market 2-3 days, that's it. So you have to be able to react quickly such that you can make an informed decision, and then you can present and write your offer, and you have your pre-approval, and you know exactly what your payment's going to look like. As I said, readiness, preparation, I drive that in all the time. When it comes to a first-time home buyer or just any buyer, I always want my documents up front, because we don't like surprises, like a little side hustle that we find out was on the tax return, and now it throws your pre-approval into disarray because now there's a business that we didn't know about. Not a problem if it's generating income and you've had it for at least maybe 2 tax years. However, if it's something new, and typically with businesses, there are substantial, in some places, in cases, extreme losses that could really derail your buying power if not handled and addressed properly. So we always need to know what's going on. I like I said, get all my documents up front. I need all of your information. I want those pay stubs. I want those bank statements. I want those tax returns. I want it all, because the more information you give me up front, the better I'm able to respond and to assist you in terms of what you can do. I want to see your credit report. I want to know what your credit history is. Your credit report gives a story of how you've paid your bills today and how you've paid your bills in the past. So it lets us know what to anticipate, and also if there are exceptions or additional information that we need, or we need to work through a situation, need to know what that credit scenario is up front. Maryland Mortgage Program has the minimum 640 credit score, so we need to know that we're there, and no, I can't use somebody else's credit report. I actually have to pull your credit report. Oftentimes, one will say to me, well, I have the credit report from this or from this service or this other lender. No, everything I do has to be original. So I have to have your credit report. I have to pull it. Credit reports are good for 120 days. So I'm not a serial puller. The only reason why I'm going to re-pull your credit is if we're trying to tweak something on your report to get your scores up, for example, or if there's a mistake and we need to fix it. But typically, I only go through 1 credit report per transaction. So as I'm giving you just some of the things for which I'm looking, I also want to give you some information points that you kind of can jot down and keep in mind that will help you along the way. For example, with the credit report, very important that we don't have disputes on the credit report. This is one of the things that I see that can oftentimes derail an approval. A borrower will come, the credit report looks great, but then we see that there are disputes on the credit report. Please know that the guidelines say that we have to remove the disputes from the credit report, and that oftentimes when we do that, that process will cause your scores to decrease or fall. So we can go from, oh, this looks great, to, oh my gosh, we have to retool this because we have some work to do here. Better to know that beforehand. And if I'm not looking at the credit report that we're actually going to use, I'm not going to know. Not all credit reports are rated equal. So as a result of that, very important that I see the information. So again, in the beginning, I'm looking at your credit, I'm looking at your pay stubs, I'm looking at the deductions that you may have from your credit on your pay stub, because oftentimes there are things that I see there that could play a role in your pre-approval for better or worse. So I'm looking for that. One of the other things that I need are bank statements. Always request 2 months bank statements. Now, very important in this internet world that we're in, where we want to shop and buy and shop and buy, and we want to sync the Klarnas and the Kleins and all of these different programs with our pay. That's fantastic. But know that when you're applying for a loan, we've got to take that into consideration in some instances. So I'm not trying to live your life. I'm not trying to tell you how to pay your bill. However, you might want to cool it on that a little bit such that we don't have as many questions. And all what happens there is when we see those things, because it will come up, we will have to go and do what's called the credit supplement. We're not pulling a new credit report. We're going to evaluate what we see coming from the debit from your bank statement, and then ask you, okay, to what account does this belong? I've had individuals that maybe had a Klarna account, but they were 5 different sub-accounts. So I had to get 5 different updates for the sub-accounts of the Klarnas, so I didn't have to include any of those debts. So important to know, we look at everything. We look at the money flowing in, and we also look at the money flowing out. So as that happens, if we see any kind of actions or activity of a pattern, we're going to ask about that. So just be mindful of that. We're looking at everything. And oftentimes there may be undisclosed debt on your bank statement that doesn't, because not everything reports to the credit bureau or the credit report. So we're looking for that as well. So very important. Yes, you can get your free credit report. Or if I'm working with you and we're working on the credit, I'm going to go through all of this up front. Again, we don't like surprises. So we're going to make sure that what's on the credit report, what's on the bank statements, and yes, we're going to go through the bank statement line by line. I may not do that with you one-on-one, but I personally am going through your bank statement line by line because I want to make sure I'm not missing anything. Or if there's something that I see that I can make a note of it and I can ask and we can get the explanation and keep things moving forward. So that's very important. Another thing is in the readiness, your down payment. Well, I'm looking at the bank statements to see how is your money going in and how is your money going out. So with respect to your down payment, Maryland Mortgage Program is extremely helpful, but they're not going to pay for everything. So the idea that you don't need any other money, no, you need to have some money. And also too, even if we don't use all the money for the house, well, we know when people move, they have expenses or maybe they want to furnish it. Moving does cost money as well. So we don't have to use all the money, but we have to make sure that we're not setting you up for an empty house. So we're going to look at everything on the bank statement, and also I'm going to look to see what the trends are, if any, with respect to your bank statement. When I look at the tax return, I'm going to look at what's going on there. Do we have any Schedule C losses? And that would be a business that maybe you have a side hustle of a catering company. Well, the catering company made $1,000, but they had $20,000 in debt. Yes, that is possible because I just saw that yesterday. But that could work against you. So it's important to know what your credit report looks like and also how that responds or connects with your tax return. Because all of this information, even though they're separate, we've got the credit report over here, the bank statements over here, the tax returns over there, it all comes together and tells a story. And that's why it's very important to get all of the documents up front, because from there we know, okay, this person does have a business and we can see the deposits going into the bank account. So we can see that this is an active, viable business. And it's self-explanatory if in fact there are deposits coming from the business. If you're an Uber Lyft person, that's important too, because depending on if you're Uber or DoorDash, even though those are driver services, they are actually 2 different types of self-employment. So important to know that if you were hot and heavy with DoorDash in 2021, then you switched over to Uber, and then you got angry with them and you moved over to the Lyft, and then you went back to DoorDash. This too tells a story, because that also shows how we have to calculate your income. So very important to know, and that's why it's important to see the tax returns, because we'll see where you were and where you are now, and we can do those comparisons and make some determinations from there. Now, after we get all this information, we look to see what you're pre-approved to do, and we have this terrible thing called the debt ratio. And the debt ratio is important because that tells us in terms of what your monthly income is, because we look at your monthly income, that's before taxes, anything comes out. And then we look at your expenses. And that's where it's important to see the bank statements, because there may be something that we have to add from the bank statement to your debt ratio. So we look at these things on a monthly basis. So on a monthly basis, we're going to calculate your income. On a monthly basis, we're going to look at your credit report because that's going to tell us what's happening on a monthly basis. And then we have your mortgage payment. Now, I know everyone is up in arms about rates being 7%, 8%. I have seen 9%, but that was a different kind of loan. So we're not there yet. But, and I know they seem high because the past couple years ago, rates were lower. Well, with anything else, there's always change and we have to adjust to that change. I will tell you though, even though the rates are what they are, when you compare the rates with Maryland Mortgage Program and after you receive assistance, in a lot of instances, you're much better served using Maryland Mortgage Program, and the rate sometimes is actually lower and you get help. So don't knock the rate. And Maryland Mortgage Program, their down payment assistance is at 0%. So who's giving anybody anything for 0%? Nobody, not even your family. So know that it's really a great program, great assistance. The higher the credit score, 680 credit score gets you to a 50 debt ratio with Maryland Mortgage Program, 45% debt ratio with a 640 or somewhere in between there. So 640 to 679, 45 debt ratio, 680 on up, 50 debt ratio. Awesome programs. I know some of us may have student loans. I did see that directive with the recent change. Yes, I noticed it. So there's a program that will pay off your student loans. You sign a promissory note, 5 years, it's forgiven. Now we're at $40,000 in terms of what the amount of student loan forgiveness, we can say, or that will pay. But know that all of your student loans have to be paid off. So if you owe $70,000 and they're only going to lend you $40,000, that means you have to come in with the other $30,000. So know that. But it's a great way, especially with all the, oh, can we have forgiveness? Oh, no, you can't have forgiveness. Oh, this is approved. This is not approved. Well, with Maryland Mortgage Program, it's pretty straightforward. For that, you need at least a 720 credit score to move forward with that program successfully. Now, when it comes to the actual process, typically my loans close in 30 days or less. But here is where readiness is very important, because when you look at the home and you write the offer and you want the pre-approval letter and your contract is accepted, I wish it really did happen that fast, but it doesn't. Know that the clock starts ticking. So we have to be in a position whereby when I ask you for a document, you're right there ready to give it to me. When I ask you for an explanation letter, you're right there to tell me what's going on. So in this information age, yes, it takes in some cases up to 30 days to get a loan closed, but it's not like, HGTV where it's 30 minutes or less with commercial breaks, and then you're having the happy hour and the housewarming. There are a lot of steps that go in between there. Just to give you a different slide, because you're probably tired of seeing my little face over there. Not really, you shouldn't be. Oops, what did I do? I clicked on the wrong thing. This is the loan process right here. I hope this is big enough for everyone to see it. I don't want to touch anything to try to make it larger and then it goes away. But the first step is the application. And in the application, that's when I ask you for your social security number, your date of birth, all of those identifying information, your rent history. Maryland Mortgage Program needs a 3-year history. So we're going to have a 3-year history. Typically, I do all of my applications in anticipation of the use of Maryland Mortgage Program. Easier for me to get all of the documents up front, as opposed to saying, oh, I had 2 years of tax returns. Oh, by the way, I need that 3rd year. Prefer to get everything up front, because if you're doing that deep dive of information, you really don't want me to come back and say, oh, and another thing, and another thing. So 3-year employment history, 3-year residence history, and very important that we know the dates and where we live. Some people move around a lot and don't know where they were. We need to be able to write that down and to get that organized. And that's why, again, it's important for readiness, because if you need to double check when you move from one place to the next, if I ask you in the beginning, about that, okay, Lisa asked about that. Let me get that information so that we can complete this part. We do the application. Now, typically, I will do my application and do a lot of everything up front, such that by the time you actually are ready to submit your offer, you may have actually already gone through underwriting and we already have an approval for you. In this super competitive market, we have to use every resource we have to make your offer stand up and above and shine brighter than the others. So a lot of times I will actually take you through the entire process so that we can get those employment verifications. I don't know what's going on with some places, but I tell you, these employment verifications are just taking forever to get done. And then they come back a little sideways, not completely correct, didn't sign them. I'm like, you did the whole thing and you didn't sign it? Come on, we've been waiting 2 weeks. But anyway, very important to get that information up front. So I will sometimes go through the entire process of application to processing, submitting, and approval on a to be determined property address to make your pre-approval stand out above the rest. Because I could say, you're not just pre-approved, I have an approval. Give me an address, please, to make this work. And and then we're done. So again, in this scenario, we're doing the application. That takes about, maybe if we're doing it over the phone, half an hour or so. I like to do them over the phone because I get information and then also we kind of get to know each other a little bit better. In addition to that, you can also apply online and I can pull your credit that way as well. I'll always follow up and say, okay, thank you for the application. These are the documents that I need, and get that information. So once I have all of that and I have your documents, I can tell you based on your credit profile, if you're more FHA leaning or conventional. I'll run it through both ways because I want you to have all your options. We use what's called desktop underwriting and loan prospector. These are automated underwriting systems that are supported by Fannie Mae and Freddie Mac. And important to know, oftentimes you might be able to get something through these automated systems that might have a little hair on it, so to speak, but because they're looking at the overall profile and they have their models with their criteria, sometimes one may have a ding, but you can still get the conventional approval. Just depends on the overall profile. After I get your information, I've got the credit report, I've got the tax returns, the pay stubs, the W-2s, the bank statements. I have everything. Your file will go to processing. Oh, and of course your contract. The file goes to processing. And actually there's a step before processing, which is setup, because that's where we'll order the appraisal, we'll order the employment verifications if I haven't requested them up front. We'll order the title, get a quote on homeowners insurance. All of that will happen. Then after processing, double checks to make sure the file goes to underwriting. So on day one, I had your application. Let's just say you were starting off with a contract that's already been ratified or accepted. Day one, I have the contract. We did your application. By day two, because you gave me all your documents up front, we're in document submission. I order your disclosures based on the application and the property, double check my numbers, and you send me your disclosures. I send you the disclosures, you sign them, send them back to me, then it goes to processing. Processing does their double check, and then the file goes to underwriting. So processing turn time, maybe 2 days, underwriting another 2 days. These are business days. Even though I work on the weekends, they don't. So those days don't count. That's just a bonus for you guys. So underwriting comes back, they look at it, we'll get what's called a conditional approval. It means that it's approved, but we have some conditions, some things that we have to button up and answer. It could be something as simple as, I see you worked at this location, but your hours don't kind of match up with your income. What changed? Or when we get the employment verification, maybe there's been a change in your overtime. Just because you work overtime today doesn't mean that we can use the overtime in your income calculation. Very important to know that you have to have typically a 2-year history of overtime for us to use that additional income. I know a lot of times folks will say, well, I just started this job. That's great that you have a second job, but you have to have a history of having 2 jobs. You can't just decide on Monday that, okay, I'm going to take the second job because on Tuesday, I'm going to buy a house. No. We need to have a history, typically 2 years, because God forbid you buy the house, then you quit the job that you just started yesterday, and now you can't afford the mortgage payment because we did everything based on these 2 jobs. We don't want your house. We didn't want you to have a successful process. We want things to run smoothly, and we want, happy closing. Now, so underwriting, they'll ask those questions for us to get those points of clarification. The appraisal may come back with a condition, maybe if it's FHA, there's some health and safety. Excuse me. So there's some peeling paint that has to be addressed, or maybe there's no handrail for the stairs, things like that. At the present time, yes, there is a preference by sellers for the conventional approval or the conventional loan, simply because the realtor was saying, there's this idea that they have to do all these things if it's FHA. We kind of think about ourselves when it comes to this process. As the seller is saying, okay, well, what does that mean? What more do I have to do? I'm selling my house, for goodness sake. What more do you want from me? You want me to paint? You want me to add a hand railing and remove and paint something? Might be too much for the seller. Who knows? In this competitive market, could be. But appraisal will come back. If it's clean, which means it's as is, then nothing needs to be changed. If there's something that the appraiser noted that needs to be addressed, it'll come back as what we say subject to. And the appraiser will tell us what needs to happen. Remove the peeling paint, add the hand railing, those kind of things. So underwriting, that process could take easily a week, week and a half, but it's very important that you are prepared, because when we reach out to you and say, okay, your file has been approved, we have these conditions, we need to get on it, because that clock is ticking, because we're trying to get closed in 30 days or less. That is very doable as long as everyone stays on point and follows directions and listens, and doesn't go out and buy a car, go on vacation and spend all their money. So here's my list of do and don'ts. So very important that you continue to make your payments on time, because we will go ahead and, as we're getting closer to closing, we're not going to pull your credit again, but we're just going to double check that you haven't opened up any new accounts. Like you didn't buy a car that's going to look really great in front of your house, true story, and then you don't qualify. You're not going to furnish the house that you haven't closed on yet, and then you don't qualify, true story, and then we have an issue. So we're looking to see not so much that you paid your debts down or ran your bills up. We're looking to see that you didn't open up anything new. You didn't buy anything new. So no major changes. So yes, please pay all your bills on time. That helps a lot. You can use your credit cards, but don't overuse such that now we have a situation where we're in the process or in the middle, and if we have to pull a new credit report for some reason, now your balances are higher and you don't qualify. So just be mindful of your spending. Communication is very important. As you can tell, I talk a lot, but that's okay, because I'm going to communicate with you via email, text, I'll call you. Whatever you need, whatever works best for you, I'm going to do it. And then one very tricky thing that has come up recently is the gift funds. Let me just make sure, because I know that they have in here in the do section a comment about gift funds. Very important that with FHA, we need to see the bank statement of the person giving the gift. No, Lisa does not have a personal interest in how much money people do and do not have in their account, but we need to have that information. It's an FHA HUD guideline that we actually get the bank statement. And don't go and mark off or cross out the account number or cross out the address. It has to be unredacted, which means no marks or cross outs on it. So very important that if somebody's giving you a gift, let them know up front that I will need the bank statement, and make sure they're okay with that. Nothing worse than getting through the process, anticipating that we're going to get these gift funds, and then that person doesn't want to give their bank statement. That could be, a deal killer, but oftentimes we can massage and make the person feel more comfortable with it. But just in case, very important to know that we will need the bank statement. And again, the process is about 30 days or less. We look to see along the way if there are any questions. We're very much in communication with you throughout the process. I like to keep the borrower and the real estate agents informed as to how we're coming along. If there's a question in terms of, okay, where are we? Never a problem for me to talk with the listing agent and explain where we are in the process so that they know we're going to hit that closing date. Maryland Mortgage Program, we have to get our pretty much the loan signed off on before we submit to them. But Maryland Mortgage Program is very quick. It's a great program, and we're able to get the loans done in a very expeditious time frame. So we're still getting these loans closed 30 days or less with Maryland Mortgage Program and that additional assistance to help people along the way. After everything is signed off on and we go to closing, know that once we're clear to close and that closing disclosure is issued to tell you how much you need for your purchase, we have to wait at least 3 days after the closing disclosure, or as we say, CD, at least 3 days after the CD is signed by the buyer, and then we can close thereafter. The numbers sometimes change a little bit from there, but not too much. But once that CD is issued, signed off on, the file will go to closing and we'll hit that closing date. Closing typically takes, it depends. It could be half an hour, it could be an hour. It just depends. We like to have our documents at the title company at least a day prior to. So within that 30 days, I still have time built in for, hiccups. Can't have too many though. And so that we have a nice, smooth process. But the main thing is, as long as we're in communication, then it will be a smooth process. And because this market is so quick and so particular, as previously said, your experience is going to be your experience. If someone even bought a house 2 years ago or 6 months ago, the guidelines are slightly different. The market is tightening up in terms of what the banks want to see. So we have to be very careful and very diligent with how we put the loans together, because it doesn't take much to take a yes and turn it to a no. But that's okay, because I've been doing this for a long time and I could pretty much work through, I don't want to say anything, but so far, knock on wood, that was me hitting my head, I haven't had a miss. So I would love to work with everyone. I'm available, cell phone, email, text, what have you. And any questions, just let me know and I'm happy and here to help.
Lisa, thank you so much. And wasn't I right? She was the one that had all of the information. So thank you. I have learned something here tonight. So Lisa, we really appreciate you being here. Now, I don't know. Hopefully Jim is still here. He did not want Lisa and Charisse to be the only ones with technical technical difficulties tonight. Jim lost power while we were all sitting here tonight.
Oh,
so,
wow.
Jim, are you still there?
Yeah, can you hear me, Lisa?
I can. Oh, he's back. He's back. We can even see you.
I am back. I'm coming to you from South Jersey, right outside of Philadelphia. We had some bad storms come through and I lost my internet. I was scrambling, and but it came back, so that's good. And Lisa, I know we're pressed for time here, so I will just give a short presentation and then turn it over to our friends at the DHCD. But thanks again for inviting me. You're doing a great service for the citizens in Maryland by providing this information to them, and we really value our partnership with Maryland Realtors. So thanks again. And hello, everybody, and thanks for joining us tonight. I'm Jim Hall with Freddie Mac. Now, I can assure you, Freddie Mac is not a person. Okay, we are an organization, what's known as a government-sponsored enterprise. We are headquartered in McLean, Virginia, and we're mission-based, and our mission is to provide affordability and stability and liquidity to the housing markets. We are a mortgage company, but we are not in competition with Lisa and Homeside Lending. Okay, we don't lend directly to the public. We're in what's called the secondary market. So when I said our mission is to provide liquidity, what we do is companies like Homeside make loans and then they sell them directly to Freddie Mac. And that way we provide the cash liquidity for lenders that continue to lend money to borrowers. So that just gives you a little, idea of why I'm here and how we fit into the affordable lending ecosystem. And we really love housing finance agencies, and the DHCD in your state is a great housing finance agency. They have a great program called the Maryland Mortgage Program. And what Freddie Mac did, we created a mortgage program called HFA Advantage. And it's specific for lenders like Homeside to use through a housing finance agency. They can't make that loan and deliver it directly to Freddie Mac. It has to go through our friends at DHCD through the Maryland Mortgage Program. And the one great thing about housing finance agencies are they provide down payment assistance. And I won't speak very long on that. I'll let Catherine and Frank speak about their down payment assistance programs, but they just made great partners for Freddie Mac because we're out there trying to reach people that are lower to moderate income, under 80% area median income, and help get them into homeownership, out of the renter ranks, out of mom and dad's basements. So what we did, we built this program, and it's actually more affordable than an FHA loan. It's only 3% down, where FHA requires 3.5% down. And if you're under 80% area median income, we've actually reduced the mortgage insurance to help you out even more. And one of our main pillars here at Freddie Mac is education. And before I turn it over to Catherine and Frank, I wanted to share my screen here. Let me know, Lisa, if you can see it. Did it come up?
We've got you.
Okay, fabulous. So Credit Smart is Freddie Mac's financial capability tool. And this is a free resource for you. So you really, are fortunate that you tuned in tonight, because you're going to get something that can really help you through the home buying process and a homeownership journey. Now, Lisa's going to provide these slides to you, and the web address is in the lower right-hand corner. It says creditsmart.freddiemac.com. This program has been around for 20 years. And what it does, it really helps you out as far as preserving that asset, because this is the biggest financial decision you're probably going to make in your life. And, not only do we want you to buy a house, we want you to stay in that house for a long, long time. So, what Credit Smart will do is help you through that journey. And it has two sides: the financial capability side, which will teach you financial knowledge and skills and behavior habits and help you gain confidence. And then there's the homeownership education side, which is called Homebuyer U. Now, the essentials part, is, allows you to focus on your financial goals. And it's been revamped. We revamped it last year, and has a nice dashboard that you can set up that really will track your progress, set your goals. It has a notebook in there, and it's very interactive. There's videos. It's self-paced. It's not something that you need to go through in 1 or 2 days. This is something, like I said, you can keep your whole homeownership journey. And this gives you an idea of the modules that are in there. So it helps you, set goals, teaches you earning and spending, being a savvy borrower, planning to save, which is very important. You need to have a rainy day fund, because, I've been a homeowner for 33 years, and I can tell you, things happen. And, it's nice to have a little bit of money in the bank. I can tell you, when I bought my first house, within the first 2 years, my water heater went, it flooded my basement. And my father preached to me, Jim, have a rainy day fund. And I listened to him, and I know he was proud of me, and I had some money, and I was able to, get the new water heater and fix up the mess in my basement. So it's very important that you learn how to plan and save when you become a homeowner. And then again, the last modules are prepare and protect. Like we said, we want you to, protect that asset. And then there's, the home buyer you part. This is for the present. You take this at 6 modules. You have to pass a test at the end, and you got to achieve 80% or higher, and you get a completion certificate, which is nationally recognized that meets national standards for homeownership education and counseling. And the certificate's good for 12 months. And this will show the realtor and mortgage company that you're serious. You want to buy a house, you want to apply for a mortgage, and you're ready to go. And again, this is self-paced, and it's not that hard. It won't take long to do. My son and his wife, they went through it, and they thought it was very beneficial. So again, this tool here doesn't cost you a cent. Take a look at it once Lisa sends you the slides, and hopefully you'll use it. So with that, again, I know we're a little bit over time here. Thank you for joining us tonight. My friends from the Maryland Mortgage Program are going to share a lot of great information with you, and they're great people. And if you go to a lender and they don't use their programs, ask them why, because you're really fortunate in Maryland to have an organization like that. So back to you, Lisa.
Jim, thank you so much. And, speaking of great programs, Credit Smart is a really great program. Online, free, access it where you are, when you are. So please take advantage of that. And Jim, thank you for sticking with us through the storm here tonight. We appreciate it.
My pleasure, Lisa. Thank you.
And at this time, we have teased the Maryland Mortgage Program through this entire presentation. Well, now you're going to get the full details from Frank and from Catherine about the great mortgage programs that are available only to Maryland buyers. So Frank, Catherine, please take it away.
Well, thank you, Lisa. Can you let me know how much time do I have? I don't want to overstep. I know we're over the limit by a little bit.
We are
how much
over
time
a
do I have?
little bit. So just, as briefly as you can. How's that?
Okay. All right.
Yeah.
That sounds pretty good. So first of all, I want to thank all of our partners, Maryland Realtors, Freddie Mac, Homesite Financial, all these partners with the Maryland Mortgage Program for all the warm and fuzzies that you've given us regarding MMP. And really for the home buyers that are listening, we only have a few minutes. You want to go to mmp.maryland.gov. We are the Maryland Mortgage Program. We're part of the Maryland Department of Housing and Community Development. And we have a whole bunch of programs. You can come here, and if you go under home, there was a question earlier about how to pick a realtor. If you go under home and you scroll down all the way to prepare yourself, you can actually get a list of real estate agents who have taken the homeownership certification class to Maryland Realtors in conjunction with the Maryland Mortgage Program. You can get a referral for an experienced realtor who can help you purchase a home. So they know about all these programs that we do in the state of Maryland. So you can go there. So please go to mmp.maryland.gov and get started by going under home. You can look at our eligibility guidelines for the Maryland Mortgage Program. Probably don't have a lot of time to do that today. But for us, we're going to go to the professional portal, and you can go there too. This is not restricted to anybody. Anybody can go into it, and you can hit program information. And over here, you can find the income limits for the Maryland Mortgage Program. We're not going to go into them, but there's purchase and income limits in the DC area. That's for a family or a household of 3 or 4 is almost 111,000, and in the Baltimore area, it's about 174,000 for a family of 3 or 4. So there's purchase and income limits that the household has to meet for the Maryland Mortgage Program. There's also asset limits. The lender will walk you through that, but basically you cannot have more than 20% of the sales price in liquid assets to be able to use our amazing down payment and closing cost assistance program. So you can get to our products by going under interest rates. I'm just going to go real fast. I'm going to look up a couple of the programs and the rates today. We have a lot of programs. We have a first-time advantage side where you must be a first-time home buyer. And we have a flex side. You can even be a repeat buyer and be able to purchase a home with the Maryland Mortgage Program on the flex side. We have products like the first-time advantage direct and the flex direct. Those products allow you to get the lowest rate that we have. And from what we hear in the market, that's a pretty good rate. That comes with no down payment assistance, but you can use that up in conjunction with a city or a county or a foundation and be able to get the lowest rate possible and get down payment assistance from a city or a county within the state. We have other products. Really, our most popular products, probably the First Time Advantage 5% product. And that gives you 5% towards down payment and closing cost assistance in the form of a DPA loan, down payment and closing cost assistance program. It's a loan that's 0% deferred. So there's no payment required from you, but it must be paid back when you sell the house, refinance, or no longer live in the property. And as Jim was talking about HFA Advantage, HFA Advantage is a product you can use with any of our conventional products, either the direct, the 6,000, the 3%, the 4%, the 5%. You can use First Time Advantage, HFA, and you can get a reduced coverage rate on your mortgage insurance, provided that you meet the income limits for that specific program. And really, the lender can really walk you through those products. I do want to say, when you do an MMP loan, you don't have to contact us. We stand in place and work with realtors, participating lenders, and mortgage insurers such as FHA, VA, and Rural Housing, and the GSE such as Fannie Mae and Freddie Mac, in providing liquidity in the marketplace with compelling and accessible products that offer down payment and closing cost assistance, so you can be able to purchase a home and start your journey on the American dream. Now, is that good enough, or do I have more time?
Can I just say one thing, Frank? Can you go to our homepage?
Sure, let me go back.
Mm-hmm. So really quick, since we have a very limited amount of time, Frank's going to go back to our homepage. And we have an amazing lender that participated on this training. And definitely reach out to that lender because they are approved and she's one of our top performing loan officers. But go to the homepage, Frank.
One more.
Yep. You actually do not apply directly with us. When you come on to our website at the homepage and you scroll down, it will say, talk to a lender. Oop, go up. And you as a borrower will click on that. It will provide you an opportunity, put your name, your phone number. You hit get started, you put your name, your phone number, your email address, and one of our top performing lenders, top performing loan officers, just like Lisa, will get on that as a referral and they'll reach out to you. And you'll be in good hands because Frank and I do trainings for the lenders all day and every day. And they'll tell you all about all the down payment and closing cost assistance. Like Lisa said, the money that we provide you, you have to pay us back when you sell a refi, but you're not charged any interest and you're not charged, you don't have to make any payments. We have a student loan program called the Maryland Smart Buy, where we'll help you buy a house, give you down payment, and help you pay off your student loan debt. So come to the homepage, www.mmp.maryland.gov. Frank, if you can go up a little just so we can see the homepage. And see where it says talk to a lender? That's the homepage. Scroll down. And right there where it says talk to a lender, click on that. And you'll get all the information about the Maryland Mortgage Program and all the great products so that you can purchase a home. Thank you.
Frank, Catherine, thank you so much. Maryland Mortgage Program products, let me tell you, are the envy of other states. around the country. They're amazed that you have so many loan programs, one, and then also that you have one that can help, as Lisa mentioned, with your student loan debt. That's incredible.
Yeah.
So thank you guys. Thank you to Sharice, to Lisa, to Frank, to Catherine, to Jim. You know, we got through Zoom difficulties tonight. We got through weather difficulties tonight, and we still gave you a whole host of information on buying and selling a home. We will be sending all of this out to you after we wrap up here this evening. And if you want even more information, we encourage you also to visit marylandhomeownership.com. That is a consumer site that is presented by the Maryland Realtors. We have buyer and seller toolkits and all sorts of information for you there. So thank you, everyone, for being here. Have a very safe rest of your summer, and we'll see you again really, really soon. Thank you.
Thank you.
Thank
Bye.
you.
Bye.